I mentioned a little earlier about how debts are divided. Liabilities are divided the same as the assets are, except that when they take a look at your liabilities, it's just okay. How much do you owe on this? When was this debt entered into? And was the debt utilized for both parties? A lot of spouses also have businesses, and that determination comes down to it. And just as I mentioned earlier, you can't just take the assets and not the liabilities. Despite the fact that it may be your spouse's business and you want to claim the profits from that business, then you also need to be able to have a share of the liabilities from that business. So in that sense, the judge is going to take a look at the business just like an asset for the community, and divided is a lot of times what is done with businesses is they take a business valuation. You can get those professionally done. And the way that the professionals do is they take a look at your tax income, your cash flow, and they value the business at a certain amount of money. And from that, you can then divide it the net 50-50. But then you also have liabilities on the business, and that's all part of the business valuation. So, in a sense, if your spouse has a business, you're on the hook for those liabilities if you want to be on the hook for those profits. Now, there's always the option for you to say, nope, that is his business. It has nothing to do with me. I don't want a profit share of it. I don't want the liabilities of it. At that point, you can then make the argument that that is a separate asset as well as a separate liability.